The stock market is back. As always, it always bounces back, and this is shown as the S&P 500 is up roughly 7% over the last month, and the global stock market is up roughly 5% over the last month. It's worth saying for the year, both the US market and the global market is still down, but it shows that the market does rebound, which is why staying invested and carry on investing is the best and simplest approach when it comes to investing. Well, in my personal opinion, anyway. I'm of course not a financial advisor.
Obviously.
But in this video, we're going to go through my Vanguard portfolio and update as of the start of August 2022. We're going to go through my Stocks and Shares ISA, my SIP, all the transactions that I've made in the last month, how much I've got and what I'm investing into, like always.
Oh my God, okay, it's happening.
If you enjoyed this video, make sure to drop a like on the video to let me know that you've enjoyed it. Vanguard portfolio updates normally go down well. And of course, if you want to see any future videos at all, let me know in the comments below, and loads of information is in the description down below as well. So the headline figure, my total Vanguard portfolio is worth just under £29,000 at £28,952.59. This is split between my Stocks and Shares ISA and my pension, and it's primarily in my Stocks and Shares ISA, as we will see. My ISA currently sits at about 26.7k, and all of that money, of course, is in one fund, the FTSE Global All Cap. If I click into it, you can see what I've been buying and investing over time. And as you can see clearly, the last few months, I've been buying a lot lower than I have been over the course of the start of the year and at the end of 2022. And at the end of 2021, I mean.
Are you stupid or something?
Which is obviously good for me being a long-term investor. If I can invest at lower prices today, I can then build and grow my wealth more over the long term, because hopefully if there's more lows, there'll be more gains as the market bounces back, as it always does. Individual stocks and companies and specific niche ETFs and funds may not bounce back, but when you're talking broad market, the US market, or in my case, the global market, it always bounces back, and I believe it will always bounce back and continue to, which is why I plow all my money into this every single month. We're now in my TikTok setup, but one thing that I forgot to include in the video, which is of course very important and arguably the main point of the video, is that my gain is now £1,733 in my Stocks and Shares ISA. Importantly, and what I want to point out was a couple of months ago, all of my gains over a number of years had been completely gone and I was in the red. Now, with just a couple months later, I'm now back to being nearly £2,000 up, which shows why buying and holding, continuing to invest, not only is the simplest approach, but if you do it automatically, you'll continue buying all the way down and hopefully over the long term, make more gains.
Yeah, baby!
But anyway, sorry about that, and back to the video.
Drum roll, please.
My other account is then my SIP, my private pension, where I've got £2,100 just over, and once again, all of that money is in one fund, the FTSE Global All Cap. Probably very predictable by now if you watch my portfolio updates regularly, but all my money, once again, is in this one fund. I only opened this account recently, a few months ago, and that is essentially to withdraw money from my company, Making Money Simple, and get it in my own name, in my own investments. Of course, I can't access this money until retirement age, which will be in the 50s. It could even be in the 60s by the time I get to retirement age, but I'm going to continue putting money into this fund every single month. I have released a whole video on why I opened a SIP and my personal approach. I'll link that up in the top if you're interested in learning more about SIPs and withdrawing money from your own limited company and getting into your own private pension. Between the two then, that gets me just shy of £29,000, which is pretty exciting because really, hopefully, by the next portfolio update in September or October, unless there's another crash, I really should be crossing the 30k mark, which is pretty good.
Here comes the money.
And this does exclude my other investments through my workplace pension, my general investments account, my crypto, all of that stuff is separate to this solely Vanguard portfolio. If I then show you my transactions, and as always, I'm just doing this to be transparent, to show you what I'm doing and hopefully help you out, not to boast or show off, but you can see my transactions over the last couple of months. As always, $650 going into my Stocks and Shares ISA, which I've been doing since the end of 2021, and now more recently, $400 going into my SIP, which I'm going to try and do every month going forward as well. You can also see my $650 for August is a pending transaction, so it's good that that money is going to be coming out and being funneled into this fund once again.
Another one. Another one. Another one.
Now, that's the portfolio update done, but I just wanted to touch on the FTSE Global All Cap. I know I've gone through it previously in previous videos, but I wanted to touch on it again and why I use this compared to US funds or individual country-specific funds. First of all, by using one fund, it makes my approach very simple and passive and hands-off. I've not got multiple funds or multiple stocks all moving around. I don't need to do any rebalancing. This one global fund will just automatically rebalance as different companies and countries grow and contract over time.
You can stop at 5 or 6 stores or just one.
You might have heard all this spiel before if you watch my videos, but it's got over 7,000 stocks, a very low fee for 0.23%, and it tracks the global stock market, investing in large, medium, and small size companies all around the world, which is why there's over 7,000 stocks. It essentially tries to invest into every global public company possible. I use the accumulation version, so all the dividends get automatically reinvested back into the fund. There is also income versions, but I'm trying to grow my wealth as quick as possible, so I invest every month and reinvest all of my dividends. The reason why I use a global fund instead of multiple funds, as I said, is for simplicity. But the reason why I use a global fund instead of a US fund is ultimately because it's globally diversified, and history, if you look at the last 100 years, shows it's literally impossible to predict which country or industry or company is going to perform best over the long term. If you look at the top 10, 30, 100 companies today compared to 30 years ago, it's completely different. But at the end of the day, 30 years ago, if you were investing in it at that moment, you probably thought these were the biggest companies that are going to continue to go on to be the biggest and best. But of course, things change, innovation happens quickly, technology happens overnight, and then all of a sudden, some companies that are massive go out of business. And this is looking at 100 years of stock market data. The US has been the dominant country before, and it is once again, but who knows if the US is going to continue to be the dominant country going forward. I mean, it looks pretty obvious that it would be. Tesla, Apple, Microsoft, all the best and innovative companies are in the US, but in the 1990s, all the best and innovative companies were in Japan. Japan made up about 45% of the global stock market, and now it only makes up 8% of the global stock market. And that's in the 30-year period, so you can see how quickly things change. Looking at the UK, 100 years ago, after World War I, the UK made up 25% of the global stock market. It was a huge superpower. Now, the UK only makes up 3 to 4% of the global stock market, and actually some individual US companies like Apple and Microsoft are bigger than the entire UK stock market, which is pretty mental, but it's just how things are. So not only do I use the FTSE Global All Cap for simplicity, one global fund in my Stocks Shares ISA and my pension, but I also have no idea which country is going to perform the best, which is why I don't want to bet on one country, the US, or any country, and I simply use one global fund. Of course, this fund is still dominated by US stocks. Global funds generally are 55 to 60% US stocks, so as the US does well, I will also do well, but it also means if it does start to fade in 10, 20, 30 years time, I then invest globally, so I should be fine what happens either way. But yeah, thank you for watching this Vanguard portfolio update. I appreciate it. If you did enjoy the video, drop a like. Any comments or questions at all, let me know in the comments below. I'll be interested here in what you invest into and how your investments are doing. Hopefully they bounce back a little bit since a few months ago when the market seems to be never ending, just going down. But thank you for watching, and I'll see you in the next video.